Alright guys, we made it to Friday. This is Dylan with the Year Zero Report, and this is going to be your daily brief for September 16th, 2022. We got a number of stories to get into today. Just going off the top of the list here, we're going to go over that Twitter account that we've been discussing the last few days that posted in advance in the spring of 2021, the exact day that the Queen would be announced deceased. And they had an important update that was to be released this morning. I believe it was at 11 a.m. Central Time. That update has come out. We're going to go over that. We're going to talk about some protests that have broken out across Haiti. We're also going to talk about the LA port and a reduction in inflow of a rather large percent. We're going to go over that and supply chain issue attached. We're also going to talk about 42% of businesses within the United Kingdom are declared insolvent on a year-over-year basis. So some more economics over there in the Eurozone. We're going to talk about a 600 million arms package from the U.S. over to Ukraine. So yet again, another arms package, another funding of the Ukrainian proxy war. We're also going to talk about how those arms are actually coming out of our own stockpile, and the Pentagon's already sounded the alarm on this. So we're going to obviously have to replenish those arms. Will Biden regime do so? Highly doubtful, right? It's all part of the bigger picture. We're also going to talk about the day-ahead energy prices across the Eurozone. We've seen a massive pullback today. We saw one yesterday as well, with talks that Germany would acquire a few power plants. As of today, it looks like they have acquired a few power plants that were actually under Russian control, which they're negotiating taking control over. So we're going to talk about the pullback across the energy crisis in the Eurozone. And then, as always, we'll talk about some market updates, just go over the dollar. We're going to talk about 10-year treasury yields. We'll cover Bitcoin real quick, financials like that. And as always, we'll end it up with the daily cyber threat map, and as well as a day-ahead look for European energy prices. But thank you guys for being here. We made it to Friday. We're about to have an excellent weekend, but let's hop into some stories. So right off the bat, we're going to go into that Twitter account. So I didn't have too many high hopes for this. It was a curious post that they happened to nail the date that the Queen would be announced deceased. So keeping up with that, we have another date. I believe it's November 18th of 2022 that this account has posted that we should see a huge decision against a former president. Sounds like it'll probably be Trump. But scrolling down, here's this video that everybody was anticipating. We didn't know if it was going to be a video, an article, what it was going to be, but it's actually just a cartoon short clip going over the Orcanian Odyssey. So if you guys want to check that out, go check it out here. Everything I show you, article, tweet, video, it's all going to be linked below in the description box so that you guys feel confident sharing that out and you can check the sources yourself. We're not going to watch this clip. If you guys want to see it, check it out in the description box. Down below, yeah, so the account continues to go on. I did want to show you guys that date, the November 18th. Let's see if we can find it real quick. If not, we're not gonna waste too much time. Okay, here. Oh nope, that's September 16th. Oh, yeah, I don't want to waste too much time on it. Here it is. A major world announcement will be made impacting a former U.S. president on November 18th, 2022. So we'll follow up with this when we get closer to that date. And if anything new develops here, I'll be sure to throw it into the daily brief. But moving on to the next story, we're going to be talking about Haiti and some protests that have broken out here. So we can see that there's a major protest in the streets. This is all due to inflation. Some mass amounts of people. I believe this footage is from yesterday, and then I have some footage on our Telegram on at Year Zero Report showing some more. So we'll look at that real quick. All right, so you guys can see here, there's a lot of protests, and this is going to be going worldwide. We're going to see it in third world countries first, and then as it bleeds into larger economies, such as South American economies, which we're already seeing. We talked about it yesterday. And now, of course, the beginning of what we saw in those countries about 6 months ago, we're now seeing develop in the Eurozone and slowly begin to pick up pace in the United States. So is this what we're going to look like in 6 months from now? Me personally, I do not think that we'll sustain another 6 months before we reach these levels. But what do you guys think? Comment below. Let me know what you guys are seeing, thinking, thoughts. But It's chaos everywhere, right? Hopefully you guys got a little bit of the audio out of there, but just again, people protesting. Moving on to the next story, we've seen this in before we move on. We saw this in Sri Lanka, some Indo-Pacific regions as well, but this will continue. It'll continue. Moving on to a supply chain conversation here. Imports into Los Angeles, America's largest port, plunged 17% in August. We're talking about almost a quarter. Almost a quarter. I mean, even if it was 10%, that is a large reduction in a month's time. So, of course, this is going to trickle into the supply chain issue that we're already facing, have been facing. Just to touch on this briefly, let's see. On Thursday, the Port of Los Angeles reported total throughput of 805,000 20-foot equivalent units in August, so down 15.5% year over year. So it looks like the headline was a little bit off there, but I think they have an adjusted percentage. So 17% year over year. You can see a steady drop off here in the chart. But this will definitely affect both sides of the country, whether you're on the East Coast, the West Coast, doesn't matter. It's a supply chain. So that'll continue going into the winter. Here we have a post from Disclosed TV. Companies declared insolvent in England and Wales jumped by 42% in August compared to last year, according to government data from The Guardian. We talked about this in a daily brief a few days back. I believe it was 6 out of 10 UK businesses were facing insolvency within 30 to 60 days. So this is basically your update on that. We're looking at about 42% have declared insolvency. So it's much faster than what they anticipated on their previous report, which seems to be the theme. Anytime the government's giving us some form of a deadline or a prediction, they seem to be far out in the future, and instead we see it hyperinflate, for lack of a better term. We rapidly approach those deadlines. Moving over to that arms package deal, yet again another arms package deal of how much? $600 million worth for Ukraine. It marks the 21st time U.S. draws down from its own stockpiles. So previously I shared an article from the Pentagon, I believe it was in the third week of August, where the Pentagon sounded the alarm about draining our arms stockpile. And as far as I can tell from government data, none of that's been replenished up to date. I'll do another checkup on that over the weekend. But here's 600 million arms package for Ukraine. We're just sending it out, whether it's money, food. This is crazy. It's a proxy war. We might not have boots on the ground, but we're certainly heavily involved with this. And Putin has made that very clear that he's aware of that most NATO nations have contributed to this proxy war. And on a previous story, we talked about the long-range missiles that were directed into, I believe it was Kharkiv maybe. I don't think it was Kiev. My apologies there. Those long-range missiles, Putin believes that they have intelligence to prove that those missiles were not launched actually in Ukraine, but rather inside of a neighboring NATO nation. If that's the case, that breaches Article 5 of the NATO agreement, and it turns everything. This whole playing field is going to change big time, and we're looking at a declaration of World War III. Not to fearmonger, but that's where things are going. What do you guys think, though? What's your opinion? What intel are you guys seeing? Again, love to hear from you. A little bit of housekeeping before we move on. You guys can find the Year Zero report on Bitchute, YouTube, Rumble. If you guys are looking for consecutive content on a daily basis outside of the daily brief, definitely follow us on Telegram. That's going to be at Year Zero report. I'm on there constantly posting updates and whether it's medical information in the Lancet Journal that might have just been published, peer-reviewed studies, or we're talking about global conflicts, geoeconomic developments, you name it, weather announcements. So be sure to check that out. And if you guys love this content, be sure to like and subscribe. You could also buy me a coffee and keep the lights on here, keep these daily briefs going by supporting us over on Patreon. And that's also at Year Zero Report. And I have a number of tiers that you guys can look through. We have a digital library with over 150 titles that you can download PDF version. I also offer trading courses, consultations, but be sure to check that out. Moving on over here, let's go into why we're seeing a pullback on the energy crisis. So Germany seizes control of Russian-owned oil refineries. This is coming out of the Epoch Times. German officials said Friday that Berlin has taken control of 3 Russian-owned refineries located in Germany in a scramble to shore up energy security before the planned embargo on oil imports from Russia kicks in and further squeezes energy supplies. So this will be a temporary relief, I believe, but if we read further into this article, I highly recommend you guys do so. The 3 Russian-owned refineries that were taken over are not enough to subdue the upcoming energy crisis across the Eurozone. So we're going to see a mild pullback, but I guarantee within a couple weeks, new developments and data will come out, and we'll just see it surge yet again. At the end, actually, let's just get out of the way here because it pairs with this story so well. We're seeing the Germany seize these 3 refineries, so let's go ahead and look at the day ahead. The day ahead, this is the lowest we've seen it in weeks. So on a daily basis, we're seeing a heavy pullback. Of the highest I'm seeing here is up to minus 66%. And this is huge. If you guys recall or look back at the previous videos, we were pressing numbers of $700 per euro per megawatt hour. Just insane inflation. But of course, with the news from Germany coming out today, we're seeing a heavy pullback on electricity prices. With Estonia's up 22%, so they're still getting heavily inflated, but nothing like we were seeing in the previous days and weeks. But it looks like overall we're seeing a heavy pullback. So it's good for the short term. It's going to lower down the monthly bill, but the monthly bill is already at unbelievable heights for the typical European. Whether we're talking about a business owner or residential, this is squeezing everybody out. And this goes into the World Economic Forum, the orchestrated collapse. They're going to make us feel like we don't have anything, we can't afford anything, and we're going to be on our knees begging for a new system. That's their goal. Is it going to turn out that way? Absolutely not. Absolutely not. So it's beneficial short term, but we'll see these spike yet again. Let's go over some finance rules, though, some economics. Let's start off looking at Bitcoin. We're going to look at this on the daily. Again, we're in that range. I haven't covered it in every daily brief just because I've already mapped out this range a couple weeks ago. And we have our range top, of course, up here. We have our range EQ, and then we have our range bottom. And we're just kind of ranging in between the EQ and our range low. And I would expect that. So until we see a breach of the low or a breach of the EQ, it's the same story, right? So let's look over at 10-year yields. Of course, we're surging, have been surging the last few days. Again, I've pointed out we do not want to see this claim higher than a 3.499%, which is a previous high back on the 14th of June 2022. So we're watching this closely. Of course, we're wrapping up the week, so we should see some cool off hopefully going into next week. We'll see how futures open on Sunday. 30-year, same story, right? Surging higher. If you guys look at the 2-year, I think we pressed over 4% today. US dollar, which is the symbol of DXY. We're just kind of lingering around, as I pointed out this week, that we've just been making lower highs on the RSI, which you guys can note up here. So these lower highs are showing some downtrend, and that we should see a trend reversal, which would be down at least to our range EQ. The baseline of our demand zone here, which is a Fibonacci retracement, puts it at about 106.61. And then we also have our 200 EMA, which is this blue ascending exponential moving average, which as this price does begin to come down, it will pull the EMA down, which I'm expecting a pullback to match the level of 101.77, which would be a healthy full pullback if we do get that. Now, if we do see the dollar pull back to those levels, I would expect that we see commodities rise. They're going to get some short-term relief. We're going to see crypto get some relief as well. All these assets are pegged by the dollar. When we see the dollar pull back, it gives breathing room for all other assets, especially commodities, to surge. We'll see how equities pair. I think equities are really going... It's going to depend on how we see yields move through next week. If yields continue to surge, market isn't going to like that. Neither is Bitcoin, and we're going to see pullback, despite what the dollar might be doing. Yields go up, it might even cause the dollar to pump a bit. So we have our USD there. Let's look at the euro real quick. Nothing's really changed from our plan all week. I want to see a flip of the 50 EMA, which is going to be this yellow line. If we get a flip of that into support, then we're good to long. Until then, I'm not too interested in playing this right now, given the economic geopolitical scene across the Eurozone. Let's touch on the S&P real quick. This is S&P futures. I mentioned that when we do breach this diagonal, it'd be a good short. We did breach that yesterday, and of course opened below that diagonal, so an excellent short there. And we're looking at a resistance level of 3915. We flip that, we'll just play in between the Fibonacci levels. If we reject off of the resistance of that 3915, then we're going to short this down to the demand zone, which we have labeled there. And if you guys are curious about any of this, you're not really following along, or you want to understand more about technical analysis, or maybe you're an advanced trader and you just want to learn my strategies, I offer all that over on the Patreon as well. Also through our Telegram channel. I have 2 Telegram channels. I mostly just talk about the Year Zero report, but we also have a crypto OSINT. So that's crypto, no space, capital O, capital S, capital I, capital N, capital T, open source intelligence. So we do have that where I cover some charts. But if you're interested in more depth analysis, definitely hop on over to the Year Zero report Patreon, which will be linked below if you guys want to get some educational content on that. NASDAQ looks the same. We lost the diagonal. I'll just show you guys real quick. It's basically the same deal. Lost the diagonal, easy short, play in between the levels. The only difference is we do not have a Fibonacci level in between these two, unlike the S&P. So we could see a reclaim up into this resistance level of the Fib and then draw back down. So that's what we're looking at in U.S. equity markets. We talked about Bitcoin. We saw the Ethereum merge. It, of course, sold off after the merge. Didn't have much of any upside, but it's following equities. It's following the dollar. Not following the dollar, but heavily reactive to what the dollar is doing. And, of course, what Bitcoin's doing with the highest market dominance there. All right, so we went over some charts. That was a bit of charts. I hope I don't bore you guys with that. But let's look over at the cyber threat going into the weekend here. Give this a minute to populate, and we'll see a lot more come in. All right, there it is. So as you guys are seeing, we're still getting pelted, but it looks like we have a ton of output today from the United States into the Eurozone, into the Mediterranean area. Getting pelted, of course, nothing's changed. Internet speed still a bit of latency there. AWS experiencing issues, external applications as well. And as I've always said, expect this to ramp up as things escalate going into the fall and winter. We already looked at the day ahead, so that's pretty much everything for you guys right there. Enjoy the weekend. We do not have a daily brief on Saturday, but I will be back on Sunday just to do a market outlook for the week ahead. And then we also host our weekly call-in show on Sunday. And that'll be on Sunday at 8 p.m. Pacific Standard Time. That'll be live, obviously, on our Telegram. So if you guys want to join that, join the Year Zero Report Telegram. Link in the description. And I'll see you guys on Sunday. Enjoy the weekend. Be safe. Love ya.